Yeah, ladies and gentlemen, welcome to Dollar Bits channel. This is a channel that is purposely made for any aspiring trader or active traders to teach you the strategies, different methods, and everything that you need to know about trading and investing, and so that at least you can get better. I am not a financial expert, definitely, and the things that I'm sharing on this platform are my own personal experiences, the challenges, the success that I've encountered through the way, and how you can become a better trader, or if how you can just become a trader like me. So this is not a financial advice. Any form of trading, any form of investing is risky, and you should do your own due diligence. You should only trade what you can afford to lose. That said, the last 7 years I've been an active developer, and been developing applications and softwares and websites for my North American clients, creating content for them and ranking those websites on the first page of Google. At least I've created more than 300 websites. Yeah. Then the last 3 years I got introduced to crypto trading, um, on the different things that were popping up on my YouTube channel, and I got fascinated on the whole aspect of trading, and then I decided to give it a shot. I didn't have a mentor to guide me through the whole process, so my journey has been tough and rigorous. The first year I didn't make a profit. I was liquidated more than 10 times, and I lost a couple thousands of dollars in the whole process. But I'm fine. We have to start from somewhere. Second year was a little bit exciting. I decided to use the experience that I have in coding a little bit to prepare how to make my own trading bots and trading algorithms, not bots. So I got some mixed results. I was getting some proper and some decent strike of good trades, but at least when we have a very strong bear market, I used to lose most of the capital that I've accumulated during that period. So I started to perfect my own methods and perfect on the areas that I should make a mistake. Then the third year, which is this year, the year that I broke even on trading and everything's running smoothly, most of my friends and the people that I know ask me on how they can get into trading, and then I decided at least I should discuss it so that they can have a good understanding on what trading is all about. So this is a purely free course, totally free, and I believe that is this is the only trading course that you'll ever need. I'm convinced on that. Sharing my own personal experiences as a full-time trader, beginner to advanced. So if you want to connect with me, definitely let's connect on Twitter at Dollar Bits channel. If you want to send me an email, if you want to ask me on any form of consultation, if there's anything you want to add, uh, you can shoot me an email and then I'll respond to you. Pretty simple introduction so that I do not waste too much time. This course is divided into 7 units or 7 parts, from the introductory part to the last part, which is managing your capital after you have made all the successful trades. The sixth part of this course is very important because we'll be doing the live trading. I'll be logging into my Binance and Bybit accounts and then doing the live trading so that at least you can see what's happening. So the agenda of the course today, I just want to give you the course overview and at least the expectations you should have, and a little bit of the introduction of the course. So expectations are pretty simple. Just like in life, do not have expectations on anyone. Do not have expectations on anything. Let life lead you to the next course, but at least have a program or be determined on where you want to go next. If you can manage your greed, if you can manage how you expect to make profits, then at least you are good. You will be a good trader. Uh, the trading is not a get rich quick scheme. Probably the first year you're not going to make a profit, or you'll just be there hanging in the balance. But you're not going to take 3 years as I took, because I'll guide you through the process. So if you can manage your expectations, if you can manage uh, how you expect to make it, then at least you will have a long and good road as far as crypto trading is concerned. So the first part of this trading is introduction. On introduction, we'll be looking at what is trading versus investing, and market trade, and the most actively traded crypto pairs. So you can place a trade. You can place a trade for, let's say you place a 5 minute trade. When you place a 5 minute trade, you can also place a 15 minute trade, or a 30 minute, or even a 4 hour trade, or 24 hour trade, or even 3 day trade. When you bet that the security of an asset is going up, you'll be looking at to long the market. If you think security of an asset is going down, you'll be shorting the market. If you trade only 5 minutes, that is what we call scrapping. If you trade on 4 hour, that is like proper trading. And then 24 hour, you become a day trader. It depends on what you want to be. Personally, I'm a day trader. But the shortest that I stay in a trade is 4 hours, and the longest that I've ever stayed in a trade, or what I stay in a trade right now, is 2 days or 3 days, depending on how good the pump is and how good the trend is. The profit that I make from trading, I invest them on other asset classes, and the biggest difference, or the main difference between trading and investing is they're just related. Trading is a form of investing, or investing is a form of trading. The difference is the time period. I trade 4 to 2 days, that is trading, but the profit that I make, I invest on in the long term on other asset classes that can be invested for 6 months, for 12 months, for a year, 10 years. That is now the investing. On the markets that you can trade, this is exciting. There are so many different markets that you can trade in. We have the crypto market, we have the forex market, we have the equities market, we have the commodity market, we have the small caps, which is just like equities market. Then we have the fixed income market. Crypto market is what we'll be talking about, so I'll give a bigger explanation of the crypto market. Forex market, I do not have any experience on crypto forex market, and I'm not looking forward to trading on forex market, so there's not much I can talk about forex market. Equities market, this is where we have the S&P 500, Standard and Poor's 500. This is where we have the Nasdaq. This is where we have the Dow. All those fall on the equities market, and then you can trade on equities market. If you want volatility, trade in cryptos market. If you do not want volatility, trade in the. If you want volatility, trade in crypto market. If you do not want volatility, trade in equities market. So for equities market, depends on what time you want to trade. If you want to trade throughout, whether the market is open or not, mostly you'll go for the futures market. If you want to trade when the market opens, you'll choose between three things. Choose between ETFs, indices, and mutual funds. There's a difference between the three, though that is outside the scope at the moment. But briefly, if you want to trade if you want to buy security when the market opens and then sell maybe an hour after the market's opened, or 3 hours, intraday trading when the market is open, you go for the ETFs. If you want to buy security when the market opens but only sell when the market closes, or at the end of the market, you go for the indices market. The difference on the indices, ETFs, and mutual funds, this is how it is on how it is managed, whether it is actively managed or not actively managed, and the management fee. That is when you have to decide whether you want to go the indices or the mutual funds. But basically, go for the indices, or in this case, as I do, go for the ETFs. I trade on futures market if there's an opportunity to trade and crypto is probably not moving, not volatile, and that's when I go for the equities futures market. You can trade on commodities as well. That is, if you want to trade on oil, this is US oil. If you want to trade on gas, NG, natural gas. If you want to trade on gold, if you want to trade on silver, if you want to trade palladium, if you want to trade soybeans, wheat, all those are commodities. You can trade even on livestock. It depends on on which security you want to go for. Small caps, these are companies that have a market capitalization of between 2 to 3 billion US dollars. They present very good opportunities for growth, and you can decide to trade on them as well. The ones that I like are the pharmaceutical companies. I like financial companies. I like marijuana stocks. And the last one is the different holding companies. You can decide to trade on them. I trade on them. They are the different ETFs that you shall have on Grayscale, on Visa, on Sacco, and the rest. You can decide to go to the fixed income market. The fixed income market, we are looking at the bond market and the money markets. Bond market, you can go for either government bonds, corporate bonds, municipal bonds. You can go for CFDs and all the other things. So the fixed income market is like a market that is crafted purposely to provide an edge when the equities market is performing poorly. So this is another subject that we can speak or that we can talk about. So let me know comment section whether you would want I shoot a video on how to trade the fixed income market. But today we are interested on the cryptos market. So let's briefly talk about the cryptos market. So the cryptos market, there are 6 main cryptos that I'm interested on, and they form the trading pairs that is in my portfolio. So let's start with the first one, which is Bitcoin. So the first one that I'm involved in is Bitcoin. This is BTC. Second one is Ethereum, ETH. Third one is Solana, Sol. Fourth, Cardano, ADA. Fifth, we have Ripple, which is XRP. The sixth one is Binance Coin, which is BNB. Then there are so many others. This is not basically based on the market cap, because if it's market cap, I need to talk about SHIB. Then I need to talk about Polkadot and the rest. But these are the ones that I'm usually interested with. And the last that I'm interested with actually is Algorand. But as far as these 6 are concerned, I only trade in Bitcoin, in XRP, and in Binance. So if I do not have an active trade on Bitcoin, then I'll have it on either XRP or Binance, BNB. And then I can also have active trade on 3 of them combined. For you to trade, you need to pair your trading, your coin against a stable coin. The two of the biggest issuers of stable coins are USDT, which is Tether, and USDC. USDC. So if you want to trade on Bitcoin, you'll either go to the USDC perpetual. Let me explain this briefly. So if you want to trade on Bitcoin, for example, you can either trade on BTC, USDC, USDT. So this is called USDT perpetual contract. Or you can trade in BTC, BUSD. This is now the inverse perpetual. What is the difference between USDT perpetual and the inverse perpetual? When I enter a trade, at the end of the trade, I want to be paid. I can be paid in Bitcoin or I can be paid in the stablecoin. Stablecoin is any decentralized coin that is pegged against the dollar. So you have your national currency. Let's say you have whichever currency the state that you are in, and then you want to buy a crypto. You're not going to buy in your currency. In your currency, you are going first of all to buy the stable coin, and then now your stable coin is pegged against the dollar. Then that is where you can use that stable coin to trade the coin, the crypto. If you want to be paid in stable coin, you trade on USDT perpetual. If you want to be paid on bitcoins, you trade in inverse perpetual. Personally, I use USDT perpetuals. Why do I use USDT perpetuals? At the end of the trade, I want to be paid in the stablecoin, and I really do not care whether the price of Bitcoin is going lower or lower. I'm already holding my tether. So if it goes as low as it can, I'll just buy it as low as it can uh, using the USDT that I was paid in at the end of the trade. The biggest advantage of using USDT perpetual is during bear market. You have some form of edge. The disadvantage of using USDT perpetual is when crypto is really pumping up. You just have your stable coin, but the crypto is appreciating in value or in assets. If you want to hold Bitcoin for the longest time possible, use inverse perpetual. If you're a day trader, use USDT perpetual. I can shoot a course on this if you want. Let me know in the comments. After we are done with the first part, we'll get to the second part of trading, setting up your trading environment. And when talk about trading environment, what you're interested in basically is what we are interested in is the trading view. How do you set the trading view? This is a trading view. We have different softwares and applications here. We have Market Cipher software that are using for trading. And again, there's a link in the description if you want to get to Market Cipher. You will get a discount when you sign through that link. We have different indicators here. We have the down-chain channels. We have the down-chain channels, these ones. We have the middle of down-chain. We have the support and resistances here. This is the RSIs, or you should enter the market when the RSIs are green. We have the yellow waves, we have the blue waves, we have the white waves, we have MTF here. We have different indicators here. I'll be taking you through the search of the trading view so that at least you can understand everything here. Very important. So how to set the trading view? The most important indicators that you need, including the RSI, the blue waves, entry signals, the MACD, the stochastic, and the rest. So we'll be looking at the different indicators that you need. If you want to go to the free plan, which indicators you should install in your trading view to facilitate your trading. Trading software, I use Market Cipher. Definitely talk about Market Cipher, the in and out of Market Cipher, success that I found with Market Cipher, and the failures that I have also encountered, and how to avoid uh, uh, early fake entries that can result as a form of market manipulators the wells. How to choose your trading platform? Here I use two platforms. I use Bybit, then I use Binance. The day-to-day trading I trade on Bybit, and I take some of the profit and put it on Binance because Binance is the biggest exchange in the world. The second biggest exchange was FTX, and right now we are the time I'm shooting this video, which is 20th of November. We're having the biggest scandal in the crypto market. The second biggest exchange, which is FTX, run by Sam Fried-Bergman, went bankrupt, and the billions of customer funds are missing. So you need to put your funds on an exchange. At the same time, at the end of the trading, you also need to hold your coins on a different uh, application where you can. They usually say not your keys, not your coins. So how do you choose the platforms? Where do you store your coins? The one that you're not trading, and the rest. That is what we'll be looking in the second part of this course. The second part is how to establish a trading strategy. It's very important to have a routine. There is a lot of noise in the market. There is a lot of influencers on YouTube and stuff trying to tell you how to enter the market, the next biggest airdrop, and the rest. It's too much noise. You should never listen to that noise, because if you listen to that noise, you're going to make losses. Just follow your strategy and follow the indicators that you have. So how do you eliminate such noise in the market? So what do you do in times of uncertainty? Like right now, we are facing uncertainty. Some are calling the Bitcoin bottom to 10,000. Are we at the bottom already? Oh, are we moving? Are we going up to 24,000? So those are the things that we need to talk about. Trading is a full-time job. I am a full-time trader right now. I only do 5 things during the day, the whole day. I sleep, I wake up. When I wake up, I read for 3 hours. I go for gym 2 hours. And then the other thing is trading. So my work is just reading, gym, uh, trading, and sleeping. Those are the only things that I do. I'm a full-time trader. So, but I didn't become a full-time trader in my first year. It took me 3 years to become a full-time trader. Through the successes and the failures that I have encountered. And then I can just survive on a just 10% profit per week. That is too much money for me. Too much. Enough money for me, I guess. So how do you establish a trading strategy whereby you can just get 10% every single week or 20% every single week, depending on the level that you're using? So those are the things that we'll be talking about, and how long it can take you to become a full-time trader. If you want to how to enter the market and how to exit the market, what do you need to get to that level? The fourth part of this video is risk management. This is the most important thing that you need to become a trader. You must be in a position to manage your risk. If you cannot manage your risk, you get liquidated so many times and you get so much frustrations in the market. So we'll be looking at how to hunt for trading signals, how the end signals, how do you manage your leverage. Leverage is your biggest friend, at the same time is your biggest enemy. People get liquidated because of use of leverage, so much high leverage that cannot sustain their trade. So what is the right leverage to use? Personally, I use a leverage of 7x. Is it too much for you, or is it too little for you? And if you're a beginner, where are you supposed to begin? The highest I've ever gone on leverage is to 12.5. The most important thing right now is defense. Any team that wins Premier League doesn't win Premier League because it has the best strikers. It wins Premier League because it has the best defense system. You can defend, and then you'll always get opportunity to attack, which can result in a goal. But if you can defend, it means that the other team is not going to score against you. Same as crypto trading. Most important thing is to protect your capital. Whales are there looking for every single capital that's in the market, what you call liquidity, and they will short the market up to a certain level so that they can eliminate all those people who are having stop loss at the same time. This is the most important thing that we'll be discussing on the fourth part of the video of the course. So how do you set your stop losses in the right way? When I enter the markets, I always have a stop loss in practice. Do I set the stop loss immediately, or do I set the stop loss after I get the first, after I exit the, after I take the first chunk of profit? I'll be demonstrating how you set the stop loss in the right way and the margin so that you can give your trade to operate. Because when you enter the market, let's say right now Bitcoin is 16,624. You cannot set stop loss at 16,600. You'll get liquidated. At the same time, you cannot set your stop loss at 14. You will lose a lot of money based on the leverage that you're using. So what is the ideal level of stop loss that you can set? Very important discussion we'll be having. Then how to control your greed. You might find that at a given time, crypto is pumping very well. You are up 30% unrealized profit. Do you take that profit? Do you take part of it, or do you take all of it and exit the market? What happens when you take 30%, when it's unrealized profit 30%, and then it's pumping all the way to 100%, and then you exit the market at 30? You'll feel bad, right? So how do you manage? What percent of profit are you supposed to take at a given interval? At the same time, you can stay in this trade for too long and then it reverses until you lose money. So how do you set on that? Very important discussion and very important interaction we'll be having during that time of trading. And then we'll have to talk about safe custody of your coins. Do you want to put your coins in a decentralized exchange, or do you want to put them on a wallet, on your wallet, on your trust wallet, or on whichever wallet that you're using? Very important discussion. And what I do, I'll be sharing my tips. The fifth part is trading psychology, and trading psychology is everything. Whales out there looking to drive fear to you, so that at least if you're on a trade, you exit the position, or you accept to put a stop loss, so that they can, to avoid getting further losses. So at this moment where we are facing fear, uncertainty, and doubt, how long are you supposed to sit outside a trade before you can end a trade? Very important discussion we'll be having on this, on trading psychology. Pump and dumps. We'll be looking at RSIs. This is the most important thing that can help you know whether we're having a pump or a dump. So when you look at the 45 minutes RSI, these two lines, these ones are green. It means that at least for the next 45 minutes, market is a little bit stable. But when you look at the 2 hour, you look at the RSIs, they are red. 4 hour, the RSIs, they are green. So for me to enter the market, at least I need at least to wait for 2 hours to see, or to wait for a dump to continue until these RSIs become green. But you can find a time where 2 hour, 4 hour, 8 hour RSIs are all red. That is where the dance begins. That is where we are going to have a lot of volatility, and that is the time you need to stay out of the market. And the thing about volatility, it goes both ways. It goes up to liquidate the shorts, and it goes down to liquidate the longs. So how do you stay out during that period of volatility? What indicators do you need to check so that you do not enter the market during the times of volatility? If you can manage volatility, you just become a good trader. Manage volatility and greed, and leverage, you survive the market. So when you find yourself on a losing trade, because you will always find yourself on a losing trade, what do? Do you continue taking the losses, or do you exit and then take a manageable loss and wait to fight another day? Very important discussion that I've learned through a lot of pain. I'll be sharing my experiences and also giving you a guidance or my perspective on what I do. Probably it will help you to make better decisions. That is what we'll be discussing on the fifth. Yeah, so the next, which is part 6 of this video, we'll be looking at the live crypto trading, the most interesting part. On the live crypto trading, this part is going to be short, mostly on a live stream. You'll see me enter the market, exit the market, and then you'll ask me any question you have during the live stream. I'll walk you through the structure of Binance and Bybit platforms, how to open and close a trade, how support and resistance definitely work. When we talk about support and resistance, these are going to be defined by the trading software that you use. So this is the one that I'm using. All these green dots, yellow dots, white dots, all these ones are support resistances. How do you trade on support resistances? It's going to be very interesting to understand how you can use support resistance to make your trades. Taking profits. Very important to take profits. I have a method of taking profits. When I end a trade, even before I end a trade, I normally know at what levels I'll be taking profit. I normally take 3 to 4 profits in any single trade. I normally set 3 or 4 interfaces to automatically take profit when a price of the asset I'm trading in it's such a level. So what is what is the most appropriate range to use? Is it plus 100, plus 500, plus 300? I'll be explaining that to you definitely. Then we'll talk about you can be on a trade for too long, and then a reversal happens, and then the reversal is catastrophic, becomes a capitulation. You lose all the profit that you had made, okay, that you are about to realize. At the same time, you also lose your capital. So it's very important for you to not get greedy and take profit at the most appropriate times before a reversal can happen. Very, very important for you to know that. So we'll be looking at that point at this aspect in the part 6 of live crypto trading. So the second part is the most important. This is what will define whether you are going to have a consistent profit over time. So you've made your profits. How do you protect your capital? Not all the times you'll be making profits. Sometimes you'll have to take some losses. So when there's a loss, how do you manage such a loss? If you find yourself on a losing trade, what do you do? Do you let the losses continue, or do you take a portion of a loss, exit the market, and then leave to fight another day? Painful lessons that I have learned through this aspect. There'll be a lot of pumps and dumps. Pumps and dumps normally happen when whales are fighting each other. You know, we are a very small creature in the ocean. So when whales are fighting, stay out and watch. And then after they have killed each other, that is when you enter the market. Do not fight a fight that you have no chance of winning at all at all. You will be mentally exhausted, financially exhausted, you will lose morale. So how do you deal with pumps and dumps? That's a very interesting topic we'll be talking about. How do you manage volatility? And from my experience, volatility only occurs on very simple things. So right now, as the time I'm shooting this video, the price of Bitcoin, volatility is defined by RSIs. So these two lines here, the yellow one and the green one. At the 45-minute mark, this one is green. So I'm expecting for the next 45 minutes, when this candle closes, it's going to close in the next 28 minutes. For the next 28 minutes, at least we are going to have some relative stability. But the next 2 hours, which is these RSS are red. I'm expecting this market to continue jumping. The RSS are red. 2 hour, the 4 hour, the RSS are green. So at least for me to make a decision on whether I'm going to enter this market or not, I have to sit out for at least 1 hour, 57 minutes. And then from there, I'll decide how the market looks. Sometimes you can find 2 hour RSIs red, 8 hour red, 12 hour red. That is where capitulation happens. That is where we are going to have maximum pumps and dumps and volatility. So stay out at least for those candles to close. I'll be explaining that to you basically. And escaping the bear run. If you have not escaped a bear run, you can never be called a trader. You have to survive a bear run for you to become a trader. You have to look at how to survive a bear run. And if you survive a bear run, basically you survive the market. As simple as that. So it's going to be a very exciting course. So let us connect. Follow me on Twitter, $bits. Shoot me a message if it is something you want to tell me. If there is any suggestion, if there is anything you want to us to cooperate together, if there is anything you want us to work together on, if there is something you want to pass information to me about, send me a message, send me an email. Let's connect on my Discord. I'm active on Discord, and then we'll have a discussion on anything you want to know. If you want me to guide you on anything, if you want one-to-one training or stuff, let's have a discussion and then we'll see what it goes. So thank you so much for your time. I'm looking forward to build a very exciting community of traders. I'm looking forward to you achieving success, because that is the main goal. If we can achieve success, everyone becomes very happy. There's too much. This cake is too big. It cannot be eaten by one person. So let us share the cake of trading and the markets. So I'll be showing you things that we never learned in school, the things that I've learned through the streets and through different interactions and my own personal experiences. So looking forward to interact with you all. Thank you so much for your time, and I'll be dropping second part now, part 2 of 7 of this course in the course of this week. So ensure that you like this video. Basically, that's all what I can ask. Share this video. It's good to share something that you find useful, and subscribe to the channel so that you do not miss on any updates that I make. At the same time, you do not miss on any time I go on live on a live stream trading. So thank you so much for your time, and see you then.